Good morning, and welcome to episode 108 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 1st, 2023. The big news today is the second day of the January Federal Open Market Committee meeting. It's finishing up on February 1st, but it's still the January meeting, and today is the day that we expect the rate hike decision from Chairman Jerome Powell and the Fed. We've seen over the past couple months a decrease in both the PPI, the Producer Price Index, and the CPI, the Consumer Price Index numbers, and that is emboldening the Fed that they have actually made an impact and have started to take out some of inflation's sting. As a result, the markets expect the Fed to continue the trend they started last rate hike decision, where they went from 75 basis points or 0.75% down to a half or 50 basis points. They expect them to ease that further to 25 basis points or a quarter point this time around. Time will tell, see what they do. Many expect, almost 100% forecasted, believe that we will see a 25% rate hike this time around, along with some hawkish commentary from the Fed about the fact that they will not stop the job, they will not give up the fight until inflation is beaten down and back to their 2% level. We'll see how successful they are as time goes on, but in the meantime, volatility continues in the markets leading up to the decision. Yesterday we saw gold down significantly at the start of the New York trading, and then by mid-morning it was back up for the day. It stayed there pretty much all day, and then this morning we're seeing gold barely break even and silver down again. We'll see how that plays out once the decision comes out. That's just posturing. In the background, while the Fed is getting ready to make their decision public, we're also wrangling with the debt ceiling issue, which makes me just laugh every time I hear it, and the fact that spending is talked about, ballied about by both sides. They go right to the brink about, letting the currency default and not raising the debt ceiling over cutting back spending and all this other garbage, and in the end we all know what's going to happen. They're going to raise the debt ceiling. Imagine if you could do that too. Wouldn't it be great? You spend as much as you want on things you need, things you don't need, whatever, it doesn't matter, and then when you get to the point where you hit your credit limit, you just raise it. Why not? And then spend some more. This happens every time. It sickens me. It's drama and theater. It has nothing to do with cutting back on spending. It's just posturing by the Democrats and Republicans to plead their case for what they want to spend things on, and then they both turn around and spend too much money. And that's why we're in this mess to start with. We spend too much money, they cannot pay their bills, they go ahead and increase the money supply, we get inflation, and we get taxed. Make no mistake, inflation is a tax. These people need to balance the budget and stop pulling money out of our pocket unnecessarily. All right, I'm done with my rant. Let's take a look at the markets and see what's happening here. Right now, gold is at $1,929.60 an ounce. That's up from $1,924.20 last week. That's up 0.25%. Silver lagging slightly, up 0.1%, 5 cents. It's at $23.55 this week versus $23.50 last week. Platinum is down 3% to $1,016 an ounce from $1,047 an ounce, and palladium is down just over 3% to $1,749 an ounce versus $1,806 an ounce last week. As a result of gold slightly outpacing silver, the GSR is up 0.05 to 82.24 from 82.19 last week, and the US dollar continues to give ground. It's down to 101.86, posting below 102. Last week it was 102.07. What we're seeing this year is we're seeing the markets believe that the Fed will soon pause, and the markets will, or the Fed will soon then pivot, and they're all starting to drink out of the punch bowl, whether it's spiked or not. So the equities markets are up. We've seen what's happened with Bitcoin. I believe it's up about 40% so far this year. Of course, it's got a long way to go to recoup what it lost last year. And gold, this time last year, gold was down a couple percent on its way to about a 10% pullback before it came back raging at the end of the year to finish flat. So far this year, gold's up about 5%. So all the markets are benefiting from the belief that the Fed is about done. We will see as this plays out. In the meantime, we want you to go ahead and like us, subscribe to us, send us your comments and questions on YouTube. Go ahead and follow us on social media. Get our monthly newsletter information line and our Always Something Interesting alerts twice weekly. But in the end, don't ever forget that getting rich starts with keeping what's yours.